Hey guys, I want to talk about realty income stock and why I think right now is the perfect time to buy it. We have the market topping and we have bonds hopefully bottoming. And if you don't know, REITs, real estate investment trust, really follow bonds. So I'm going to be giving you my in-depth analysis on realty income. We're going to look at their numbers and they just released this special investor presentation that we're going to look at. Remember, realty income, it's a really boring stock. I get it. You're not getting any awards for owning this company, but what you are going to get is a monthly dividend. And check this out. If we look at the market right now, especially the S&P 500, it's at an all-time high. But look at realty income. It's actually down the past 3 months 11.25%. And I think right now the market is not looking for dividend stocks. And that's exactly why I think right now is the time to buy realty income. We've had two back-to-back incredible outperforming years. Like historically, we've had 2 years in a row that have outperformed, like 31% the past year. So I think if the market goes down, if we get another retracement, people are going to flood their money into dividend stocks, the high income yielding stocks. That way they can get a yield. And anyway, let me go ahead and show you realty income's numbers for yourself so you can kind of draw your own conclusion. They also just rose their dividend, but by a very insignificant amount. But anyway, let me show you their numbers right here. First off, they're a pure growth company. Well, they just did an acquisition with Spirit Realty, and look at their sales growth. It's up 28% year over year. And you don't actually look at net income for REITs because it doesn't add back the depreciation and the amortization, which is super important for real estate investment trusts, for real estate stocks. So we actually go down here and look at their free cash flow. It's $841 million in the most recent quarters. So let's see how much their dividend costs from this. So they made $841 million, and check this out. It's on the left here. Their dividend only costs $689 million. And if you're wondering, well, that's still a pretty high payout ratio. That's actually because they're a real estate investment trust and they have to pay out most of their income in the form of dividends by law to be exempt from taxes. So it's not abnormal for the payout ratio to be very high. And also, I forgot to mention, they have a great yield of 5.7% dividend yield. And here's one more reason why I think REITs are going to do so good over the next year here. As interest rates go down, the US 20-year Treasury yield will go down, so the stock price will go up. And if you don't know, real estate investment trust REITs follow this very closely. If you look at the price of TLT, which is the US 20-year Treasury bond, and we look at realty income or any REIT over the same time period, the charts, they don't look exactly the same, but they rhyme together, which is pretty cool to look at. It's not just realty income. You could look at any REIT for most examples here, but they all pretty much follow whatever bonds do. And I was originally just going to buy TLT, just buy the US 20-year Treasury bond, but I thought, why not buy a real estate investment trust? You're pretty much investing in this, and you get a higher yield, and you're not just holding a boring bond. You actually have assets. You have real estate assets, and I love the triple net lease model that realty income does. And they have such an impressive investor presentation here. So let me show you that right now. Realty income's also in the S&P 500. They're a dividend aristocrat, which means they've been raising their dividend for over 25 years, never had to cut it once, not during 2020 or during 2008. They've been a public company for a very long time. Look at this, back all the way to before the year 2000. And it's funny, they have there's only like 20 tickers that are one letter. There's not like a ticker symbol, just Z or some weird number, but they have ticker symbol O, which is very cool. I mean, there's no value to that. I mean, they have the trademark, the monthly paying dividend stock. But anyway, let me show you the slide from the investor presentation. All right, so here's Realty Income's most recent investor presentation. They just made a brand new one, and I think it's pretty cool. I want to share it with you, and I'll kind of explain what this company does if you don't know. First off, they have a very safe AAA rating from S&P Global and Moody's. Like I said, they're a Dividend Aristocrats member. They're in the S&P 500. And if you don't know what Realty Income is, here's what they are and who they do. They have 15,000 properties, and 98% of their portfolio is made up of single-tenant properties. If you're wondering why, you can read this right here. And all of those are with triple net leases. And if you want to know why triple net lease, basically what that means is Realty Income owns the land under the property, and they pay Realty Income every month to be on that land. And the triple net lease means the tenant pays for all the property taxes, expenses, all that kind of stuff. Realty Income just gets the high margin rental fee. And overall, they're in 90 different industries with, this is the best part, a 98.7% occupancy rate, which is super impressive. And again, this is crazy right here. Remember how I was talking about the market being at a top? If the market does start to go down, look at this. I don't know. I'll show you a little more about this later, but look at their downside volatility. It's literally a 0% compared to all of the other top assets here like the S&P 500. And look at their adjusted EBITDA margin. I mean, I don't know if you really look at EBITDA for REITs, but it's at 95%. And Realty Income, you really buy them for the dividend. Look at this. 62% of your total return has been from 2014 since right now has just been from their dividends. So this is a very shareholder friendly company in forms of dividends. And check this out. Look at the US 20-year Treasury bond. Remember, we were comparing it to the US 20-year Treasury bond, pretty much the same thing here. We can see, look at their total operational return in all these years, like the year 2000, the dot-com bust. They did good. Housing market crashes. I mean, it fell here in 2009 to still a positive 5.3% return and in 5.9% in 2020. So anyway, they're a very defensive company if the market does go down. Here's all the S&P 500 companies. I guess the downside volatility is 0%. So, not financial advice, and none of this is. I'm just showing you what the slides here. And I want to show you a few more here. They're very diversified in Europe as well, and they own a bunch of grocery stores, and that's my favorite thing that they own. Grocery stores are doing amazing right now. That's their top segment of income. So check this out. Here is every single one of their properties, and look at that. 15% comes from Texas, 18% the Southeast, 15% from Europe, which is really cool. I like the international exposure, and they just own grocery stores and stores like Lowe's over there, which is pretty cool. And Midwest is 21%. Anyway, I love how diversified they are, and like I said, I love that the top property type is the grocery store industry. If we look at Walmart stock, if we look at Costco, they're all at all-time highs right now. So the grocery stores are doing great. Then we got convenience stores, dollar stores. I like that dollar stores are only 6%. And then these stores down here, which are like Walgreens and CVS, are only 5%. So they've actually been lowering their exposure to these kind of stores, which I love because if we look at the stock price of Walgreens and CVS, they have not been doing good. I believe Walgreens is at the same stock price they were in 1999. So I'd be careful with them. So check out this slide right here. This is from 1 year ago. So this is from 2023. Look at this. Walgreens and Dollar General made up 3.9% each. Remember, this is from 1 year ago. Now let me show you what it is now. It used to be 3.9% each. Now look at this. Dollar General is 3.3% and Walgreens is 3.3%. This is what I like to see. These are kind of the top companies. They got 7-Eleven, EG Group, which is one of the Europe grocery store kind of things. And we got Wynn Resorts, FedEx. So anyway, I love all of their quality tenants, and I like that they're lowering their exposure to these right here because these aren't the most quality tenants, but still great. Like Dollar General stock, they're still making a lot of net income, but they lost their growth. And Realty Income also just released this slide saying they're getting into the private capital market. And I'll be really quick with this. So here's what they plan to do. They haven't really done this yet, but they want to operate infinite life open-ended fund. And they will earn a visible recurring fee because of this. They want to manage some assets here because they've been doing it for so long. And let me show you what they're kind of hoping for here. If they become an asset manager, look at this. Their price to EBITDA right now is a 15.3x. They're saying if they become an asset manager, they could get a premium multiple, maybe trade closer to 20 times earnings. And let's actually go do some math. If we do a 20 times earnings on right now's adjusted funds from operations, even though they haven't really done this yet, this is just something that they're getting into. I like that this is growth, that they're looking into making more money. They're looking to get a higher multiple by getting into better industries. So I think this is very cool. But let's go do a multiple and see how expensive Realty Income is right now. So let's see what Realty Income's current AFFO multiple is. So right now the current price is $55.60 of Realty Income. And here's their revised 2024 guidance. Let's just go with $4.20, $4.20 just to make it easy. So we'll divide this by 420. That means Realty Income right now is trading at 13.2 times AFFO. They're using EBITDA here. But anyway, if we can just get a reasonable, so let's do 4.2. So we'll keep the same AFFO and let's do a conservative 19 times earnings. Not nothing crazy, not 24, but let's just do 4.2 times 19. That would be a $78 or $79 stock price on Realty Income. And today it's $55. So that's obviously like a bull case scenario, high multiple. We need to go into a lower interest rate environment to really see that. But again, I just really like this company. Over 98% occupancy rate. They should do good as interest rates go down and the bond prices go up. That should also make all of the real estate stocks, everything heavily influenced by the current interest rates, go up in stock price. Not financial advice. That's just kind of my own opinion on them. Again, I own this stock. I own 30 shares in them. I might be a little biased, but anyway, that's kind of my honest thoughts on them. Maybe you can draw your own conclusion. You can do your own multiple on their. This is their actual guidance from the most recent Realty Income investor presentation. AFFO per share of $4.21. So yeah, those are pretty much my honest thoughts on Realty Income. I can show you my dividend history as well. Check this out. I love them. Even though the price might fluctuate, I still get that monthly dividend that I know is very safe. They're in the S&P 500. I really like Realty Income. Again, might be biased, not financial advice. But if you guys don't know, if you want to support me, check out my TikTok account, Nathan_Robert. We go live, we live stream every day, twice a day on TikTok. This is what I do mainly now. Is my new favorite thing to do. So anyway, if you want to subscribe to or go follow my TikTok, I really appreciate that. You can catch me live. We just do stock analysis live, portfolio updates live. Today we're actually pretty close to all-time highs. We're going to do a stock portfolio update very soon, the next couple of videos here. But yeah, I appreciate y'all being here. Don't forget to drop a like on the video. I'd really appreciate that. And I hope you guys have a great rest of your day. Let me know in the comments if you're buying Realty Income stock.